Everyone's asking the same question right now. Should I wait until 2026 to buy a home? If you're looking in Roseville, Rocklin, or Granite Bay, I get it. You're seeing rates that still feel high compared to a few years ago. Headlines that scream, market slowdown, and you're wondering if holding out could save you tens of thousands of dollars. Here's the truth. What's happening right now in the greater Sacramento area and Placer County area doesn't match the national narrative. So today, we're breaking down what the data really says, how local inventory looks right now, and whether waiting until 2026 will help you or cost you. Let's start with the facts, not the noise. According to the Placer County Association of Realtors, we're sitting at about 2.7 months of inventory across the region. That means if no new listings hit the market, everything currently for sale would be gone in less than 3 months. A balanced market is typically 4 to 6 months of inventory, so at 2.7, we're still in a seller's market, even if it doesn't always feel that way. It explains why prices haven't dropped the way some people were predicting. Roseville's median price is hovering around $690,000, up 4 to 5% year over year. Rocklin's closer to $750,000, up roughly 3%, and Granite Bay is holding steady at around $1.2 million. That's not a market in free fall. It's a market that's tight on supply and stable on price, which tells us demand is still strong. Now let's talk about those interest rates, because that's the headline everyone watches. Here's the reality. Rates today are in the low 6% range. That's a big improvement from where we were last year when they briefly touched the high 7s to nearly 8%. But we also have to be real. Those 2 and 3% mortgage rates from 2020 and 2021, they're gone. We're not going back there. Even if the Fed continues cutting and the economy softens, most projections show mortgage rates stabilizing around 5.5 to 6% for the next couple of years. So if you're waiting for rates to go back in the 2s or 3s, you might be waiting for something that's not coming back in our lifetime. Let's look ahead. Here's what the data suggests for 2026. Inventory is expected to stay tight, maybe creeping from 2.7 to 3 months, but still short of balanced. Rates might ease into the mid-5s, but not by much. Buyer demand will likely rebound as soon as rates come down, and even if it's only half a point. When that happens, competition heats up and prices usually follow. Let's run an example. If you're eyeing a $700,000 home today and prices rise just 3% year over year, that's a conservative projection. By 2026, the same home could cost around $745,000. Now factor in higher competition, more offers, fewer concessions, and suddenly waiting costs you a lot more than you'd expect. Let's give you an example of a real-world story. One of our clients recently bought in West Park, Roseville, a 4-bedroom in the low 700,000s. They were nervous about timing too, but they locked in a low 6% rate, negotiated some closing credits, and got the exact layout that they wanted. If they had waited for that perfect market, the same model would probably be listed at $740,000 to $760,000 by next spring, and they'd be fighting multiple offers again. That's what we're already starting to see. Not panic selling, but strategic buyers quietly locking in deals while everyone else hesitates. So what can you do right now if you're on the fence? Run your real numbers. Talk with a trusted lender and compare your monthly payment today versus if rates drop by even 1%, but also prepare for them to go up by 3%. Get prepped before the next wave. Have your financing, your down payment, and your search criteria ready so when the right home pops up, you can move. Use this market's hidden leverage. Sellers are still offering incentives, credits, rate buydowns, repairs. That might disappear when competition returns. Partner with somebody local and currently experienced, because what's true for one neighborhood in Roseville might not be the same in East Rocklin or Granite Bay Hills. So should you wait until 2026 to buy in Roseville? My honest answer, not if the right home fits your budget and your goals. Rates are already down from last year's highs, inventory is still slightly tight, and demand will only build once rates drop further. If you want a local breakdown of what that means for your specific situation, you can book a quick strategy call with me using the link below. We'll run some math, compare some areas, and see if now is your moment to move. Subscribe for more Roseville, Rocklin, and Granite Bay market updates, lifestyle breakdowns, and housing data deep dives. This is Jayson Flory with Turn the Key Real Estate, and I'll see you next week.